Say when, Ed.
Where are the others?
Anytime.
Okay. Good evening. My name is Ron Pagels, and I'm the Grand Knight of St. Anne's KFC Council 10289. And I would like to welcome all my brother knights and the St. Anne parishioners to this evening Fraternal Benefits presentation meeting. So before we begin, I would like our program director, Ed Mahoney, to lead us in the Hail Mary. Pray.
Brother Knights, will stand. Hail Mary, full of grace, in the Father, Son, Holy Spirit, amen.
Hail Mary, full of grace, the Lord is with you. Blessed art thou amongst women, and blessed is the fruit of thy womb, Jesus. Holy Mary, Mother of God, pray for us sinners, now and at the hour of our death. Amen.
Amen.
In the Father, Son, Holy Spirit, amen.
Thank you, Ed. The agenda for tonight's meeting will include a brief history of our council and the possibility of our new council's name. You will be provided with a brief overview of the council's program that benefit our parish and our community. This will be followed by a fraternal benefits presentation and question and answer period. I would like to introduce our distinguished KFC presenters and guests. The first being Mr. John Stewart is our benefits agent for the Knights of Columbus, and John is also the host of our meeting tonight. Greg Pinto is our Council District Deputy. Greg. John Kurtz is our Council's Financial Secretary and also a past Grand Knight. Ed Mahoney is our Council's Program Director and our Council Advocate. Ed Merritt is our Council's Audio and Visual Technical Advisor and also obviously a brother knight. John, if you could give us a history and council name change, please.
All right. Thank you, Worthy Grand Knight. Well, St. Anne's Council was started over 31 years ago. My father, Gerald Shovelton, he was the pastor here at St. Anne's, and he wanted an organization that he could go to for help at the parish. So he invited the state to come down and talk about starting a council. It was a Super Bowl Sunday. We had over 40 members show up for it. And as of March 14th, 1990, the council was started with 40 members signing the charter. We have progressed along the road by different activities. One of the first activities we had was a festival here for almost 10 years to help raise money to pay off the parish center. It was run by Brother Knight, Brother Jack Lynn, and we had many a night working at different stations, hamburgers, hot dogs, setting up, clearing afterwards, doing supply runs. We have taken on other projects. We do have an annual road race. Unfortunately, we haven't been able to have it because of COVID recently, but we also help out at the church. We have members that serve as altar servers during the weekday masses. They also serve at funerals for us. We have lectors, ushers, We also assist St. Vincent de Paul. They have a food give out 3 times a year, Thanksgiving, Christmas, and Easter. And we assist with gathering the food and bringing out boxes of food, turkeys, hams to the cars. We have assisted with other areas when Father Mike McManus had asked us, and Father John Murray has asked for assistance. We try to help not only this parish, but we also the community. We work with Rainham Food Basket on their food give-outs. We also work with Birthright of Taunton. Matter of fact, the month of May, which is Mary's month, we do have a baby shower going on at the church for Birthright. We also participate in what is known as the RSVP program, which is supporting a seminarian to help him financially while he's learning to become a priest. We, as a council, on learning of the passing of Father Shovelton, decided to request a name change. Our council has come up with the Reverend Gerald T. Shovelton Council at St. Anne's, and we are in the process of doing the paperwork and all to have it submitted to Supreme and see if they will go along with the name change for the council. But that's kind of a brief history about the council and some of the things we do. We do try to be as active as we can in the community. That's about all I have right now for the Grand Night.
Thank you, John. Ed? Ed Mahoney is our council programs director, and he will give a brief overview also. Thank you.
Thank you, Worthy Grand Night. I'm going to highlight our programs and give a brief description on each. We think it's very important for the audience and new members to know exactly what we do as Knights here at St. Anne's. You know, these programs allow us to come together to share our faith, celebrate with our families, service to the community, and to defend life at all stages. The programs are broken into 4 categories: faith, family, community, and life. We do have financial programs that provide support to our parish and community that I will not cover tonight. We'll highlight programs that we physically volunteer at. So we start off with March for Life. We had members that participated in the March for Life in Washington, D.C., and we also participate in local marches, the last one being in Attleboro, Mass, this past January. Special Olympics. Work with Special Olympics by helping with fundraising, volunteering at events, coaching a basketball team. We actually coached the Bridgewater Raynham team, and with donations. Our charity road race supports all the work that our council does to support local organizations and families in need. KAC members help procure sponsors and race day activities. This is our major fundraiser for the year. St. Vincent Parish Food Outreach. We deliver food baskets to families in need 3 times a year. And as John mentioned, that's at Easter, Thanksgiving, and Christmas. The Raynham Food Basket Support. We support giving food to families twice a month. Taunton Birthright Baby Shower. This is a fundraising event that takes place in May to support pregnant women during pregnancy and following the birth of their newborn children. The Parish Picnic Cookout. We organize, cook food, and perform activities of the annual cook. The Tootsie Roll Drive. That's a 3-day event that we collect funds for state KFC to help with special needs. 40 Days of Life. We pray the rosary in front of an abortion clinic in Attleboro every Saturday through the months of September and October. Those are public acts of prayers to promote protection of life. Blood Drive. We work with the American Red Cross to secure blood by promoting readiness in times of blood shortage in our community. We usually do this in October, and we will be doing this in October again, but we do have another blood drive scheduled for next Friday, May 14th. Clothing Drive. This is a 3-day event to collect clothes to support our local St. Vincent de Paul Society. Clothes are given to families in need for no charge. Coats for Kids. We work with other KAC councils in our area to distribute winter coats for children in need. Keep Christ in Christmas. We sponsor a Christmas poster contest at St. Anne's Faith Formation to promote Christmas and the season of Advent with our youth. And we end the year with the Christmas giving tree. We work with Catholic Social Services, Taunton Birthright, the Raynham Food Basket, and St. Vincent de Paul Society. Gifts that the St. Anne's parishioners, that's you folks out in the audience, that donate to these recipients. It brings our council and parish together to help these families in need. So hopefully this gives you an overview of our current programs, but what we need as a council are new members with new ideas on programs and helping hands. Please give it some thought and consideration, and thank you for your time.
Thank you, Ed. And finally, we get to the reason we're all here. Our fraternal benefits presentation by Mr. John Stewart. You have the floor, sir.
Thank you, worthy Grand Knight. Hello, folks. My name is John Stewart. I am the benefits advisor or the insurance agent for this council, 10289 in Raynham. I have been the agent here for, luckily, been the agent here for almost 12 years. These gentlemen were just talking about some of the phenomenal things that the Knights of Columbus do around the community. Half of the things that you folks truly never hear about, so is done behind closed doors here. So these guys are really doing a phenomenal job in the Raynham area. My position with the Knights of Columbus is a benefits advisor. What a lot of folks don't realize is that the Knights of Columbus, as a fraternal organization, has its own benefits program. Those benefits include life insurance, long-term care, retirement annuities, disability income. So there's a lot of venues that we offer to our members, their families, children, grandchildren, and most of the coverage that I see through my experience is really generational. So I'm running into children and even great-grandchildren now that are being covered under the Knights of Columbus benefits. So I do have a presentation here ready for you folks, and it's really just going to get into what we do offer in regards to our benefits. I'm going to keep it really basic this evening. I'm going to go into a few examples of some more or less popular concepts for a lot of the folks in the Knights of Columbus are a little bit older in some councils, so a lot of these are geared towards retirees. So like I said, I'm just going to scratch the surface a little bit here tonight, and then of course there will be a Q&A at the end, and certainly if anybody would like to speak with me on the side at any point, you can reach out to me and that we can definitely set something up at your leisure. So I'm going to start now by just going through a basic benefits presentation that I have prepared for a lot of my councils. So I'm going to start there, Ed, and we are going to go to fraternal benefits. Okay, so that young man, that picture is 30 years ago, so we're going to keep that picture, 30 pounds ago too, as well. So that's me. I'm John Stewart. I'm the agent here. Like I said, I've been the agent for 11 and a half years. I live in Bourne, Massachusetts with my wife and 2 children, and I've been a member of the Knights of Columbus for almost 12 years as well. Next down, Ed. All right, Knights of Columbus. We all know the Knights of Columbus was actually created. In layman's terms, I'm going to give it to you straight. The Knights of Columbus was created back in 1882 in a very poor section of New Haven, Connecticut. Back then, there were a lot of immigrants coming over from Ireland, Italy, you name it, and with large families. And the breadwinner a lot of times was being snatched prematurely due to terrible working conditions or just bad health or you name it. But the Knights of Columbus was created to help these families and help these widows that had children. And that was really the start, the grassroots of the Knights of Columbus and how we got our start back then. Okay, Ed. When you become a member of the Knights of Columbus, you actually get some benefits other than the benefits that I offer. Some of the benefits that come with membership are the Columbia Magazine. When you join the Knights, you get a free membership to Columbia Magazine. We have our family fraternal benefit, which is a accidental death policy, and there's a couple of others. We have our orphan benefit. If any child is orphaned and their parent was a member of the Knights of Columbus, we have a stipend that is paid to that orphan for X amount of years. Member spouse fraternal benefit, a widow's benefit, of course, that is extended to any widows for the death of a member. Kfc Scholarship Opportunities. We have scholarships with the KFC on local and state and national levels. So I always encourage everyone, if you're a member of the Knights or even not a member of the community, to look into the Knights of Columbus scholarships, because you can never have too many scholarships, as you parents with college-age children will know. Leadership development opportunities, of course, within the councils. Participate in charitable activities, which these gentlemen were just talking about earlier. There's no shortage of charitable activities, especially here in Rainham. And when you join the Knights of Columbus, if I do pay you a visit, we go through your entire, what's called a profiles and forecaster, which really just breaks down your financial information, and it kind of gives us a bit better picture of what we might be able to do to help you. Okay, next, Ed. Of course, our motto, to render financial aid to its members and the beneficiaries of members. Okay, Ed? Knights of Columbus, the little old Knights of Columbus, we operate $25.4 billion of assets under management right now. The Knights of Columbus is actually one of the highest rated insurance providers as well in the country, which you'll see in the next one of the next slides. Okay, Ed? As far as an insurance company, right now we hold $109 billion in insurance in force worldwide, mostly North America. This means that there is $109 billion of insurance, life insurance, on our members, their wives, their children, their grandchildren. Hey, Ed. Proper planning, of course, starts with you. We know that. That's an obvious. Go ahead, Ed. Okay, protecting your family's future, providing a source of income, remaining in your home, which is very important to a lot of retirees. You want to ensure that college will be completed, maintain a standard of living, and you want to make sure your family's hopes and dreams aren't dashed by the early demise of a loved one in your home. Okay, Ed, you can fast forward. Our signature product is our permanent life insurance, which is whole life insurance. Whole life, the Knights of Columbus, you'll find it offers different kinds of insurance, but our whole life product is 85% of our entire portfolio. So without question, it is our bread and butter, and it is our strength. Okay, Ed. Term life insurance. Term insurance, for those who aren't too familiar with the terms, is a temporary policy. Usually when you have coverage through your employer, it's term insurance. It's rental insurance. Term insurance is a temporary product. Chances of you passing away being insured under a term policy are very slim. I think it's less than 3% of term policies in the country right now pay claims, as opposed to whole life policies, which in force, 100% of whole life policies would pay claims. Retirement annuities. The Knights of Columbus offers retirement annuities. The word annuity is not a bad word. I know a lot of folks that I've run into over the years, They have told me, no, I don't like annuities. Annuities aren't for me. And my next question is always, well, why don't you like annuities? And the answer is usually something along the lines like, my plumber told me annuities were no good. So I'm here to tell you that annuities make sense, and they make sense for a lot of folks. In regards to what our annuities are paying right now, I think I checked this afternoon, and the average interest rate in a savings or checking or CD was, I think it was less than 0.1%. Less than 0.1%, I believe, was the national savings account rate. Our annuities right now have a minimum interest rate of 1.5%, which may not bowl you over, but it's I don't know how many times, I'm not a mathematician, but how many times much better is that than the, that's right. So the minimum interest rate is 1.5% on our annuities. However, after 1 year on deposit, those annuities are currently earning 1.9% right now. The different annuities that we offer are Roth IRA annuities, standard IRA annuities, and non-qualified annuities, which would be just regular cash annuities. So anybody that might have a question about that and you want to earn more without your money just sitting in the bank really stale, certainly you can reach out to us as well. Okay, Ed. You can go ahead. This is a big one, long-term care. The Knights of Columbus offers long-term care insurance as well. Long-term care, as everybody in the room probably knows, is becoming more popular in the United States as it's becoming more necessary. I think back 20 years ago, there was over 50 companies that offered long-term care. Now there's really just a handful of companies that you would recognize that offer the product. Knights of Columbus is one of the only companies in North America that has never raised their existing long-term care rates on our existing long-term care policy holders. There is not another company out there that can say that. So certainly our long-term care, if long-term care is needed and it makes sense for you, a lot of times it can be a lifesaver, and not just save your life, but save an entire life's worth of assets that you've worked so hard to maintain. Okay. Go ahead, Ed. Pretty staggering stat here, folks. 70% of 65-year-olds will need some type of long-term care, and I believe that number is just going to keep going up as the average age goes up as well. Okay, Ed. This just goes into the high cost. This is really a national average on these. You're going to find that in Massachusetts and in the Northeast, these numbers are going to be much higher. So up here in the Northeast, it's really important to maybe look into some type of long-term care. Long-term care also, folks, keep in mind, can cover you in a nursing home, in an assisted living, or in your own home, which is really the most important to a lot of people. They want to stay in their own home for as long as humanly possible. Okay, Ed. Okay, go ahead, Ed. Disability income insurance. So the Knights offers disability income insurance. And the way I always say this is, what if your last paycheck was your last paycheck? So disability income insurance is offered to all members, their spouses, their children, all the way up to age 60 for application. So if you were, a lot of folks do have a disability policy through their employer, but a lot do not. So one of the things I stress to all of my members, if that is something that you would like to look into, if you're even remotely interested in a small disability policy, usually when I sit with folks, it's minimally just to cover the mortgage. You know, God forbid something happens and the paycheck stopped rolling in. We need something to at least cover the mortgage to take that burden off. So we do offer disability income insurance as well. Okay, Ed? Go ahead, Ed. Okay, we just went over that. Go ahead. Okay, Ed, let's just jump into the next slide. We'll get out of this PowerPoint one, Ed. We'll go to the next one. Oh, sorry. Excuse me, folks. Benefits night talking points. Here we go. Okay, thank you. So on these benefits nights, folks, I like to break this down into different age groups because I can't tell you how many times I've gone out to see folks over the years, and I run into a lot of older members, of course, that are in their 70s and approaching 80, and even past 80, and the first thing out of their mouth is, well, I'm 75 or I'm 80 years old, you know, don't waste your time with me. There's nothing I can do with the Knights of Columbus. So it couldn't be further from the truth. Second goes to the other end of the spectrum when there are children, whether it be 0 years old, 1, 2, 3, 4, 5. Believe it or not, that there is never a better time to look into some of these benefits for children. So I'm going to go over these one by one with you folks just so you can see the difference. I'm actually going to hop up here. All right, if I hop up here, Ed? Oh, nobody can see me, can they? I don't know if I like that. Okay, so these are just some of the general reasons that folks would look into long-term care or life insurance at different ages. So as you can see, I've gone from 0 all the way past 80 here. So this first section here, from age 0 to 20, child policies, which can guarantee for future insurability. So I have 2 children. They each have 3 whole life policies. I didn't take those for my children because I think my children are going to get in an accident or they're going to die or anything like that, but these policies have a cash value aspect of growth as well, and that can be used mostly tax-free down the road. So my wife and I knew at some point that the kids were going to be coming to us in the future, whether it be for marriage or a new home or what it be, and they probably need money at some point down the road, and we wanted to be able to help them, you know, along at some point. So what we did is we set up these whole life policies, and those can be utilized through loans. They can borrow or they can cash these policies in down the road if they need it. So, so that's something that my wife and I believe strongly in. What does it do? It locks in very low premiums for life. No matter when you apply for life insurance, everything is based on 2 things. It's based on your age and it's based on your health. So believe it or not, locking in someone at 5 years old is a heck of a lot less expensive than locking somebody in at 45 years old. So it's all about the age. Start children on a path to savings. Whole life for children is unquestionably a great growth product that they can use down the road. Policies may be used to secure a loan. I actually added this because one of my clients, he was applying for a small business loan, and he actually had a policy that his grandfather started for him. And through the loan process, he actually had to produce a copy of that, which showed the assets within the policy, and he thinks that was the reason why he was approved for the loan. It was that policy that brought him over the edge and got him an approval. Cash value, this is a big one, especially for folks that have young children and they want to build up their tax-free assets, which are going to be hidden assets, because cash value in a life insurance policy is a hidden asset on college education FAFSA forms. So you could have $5 million in your life insurance policy, and when you go to apply for college aid for your children, that money does not count. It's a hidden asset. Let's move along to age 20 to 40. At this age, people start looking for inexpensive term insurance to cover either college debt, a new mortgage, maybe children, permanent whole life insurance, coverage to lock in rates at a young age. As I go back to the point of age with insurance, age and health is the most important thing. So locking these in at a young age, it's important. Tax-free growth of cash value within the policy, which can be loaned out up to 90% of the cash value at any time. I've been an agent for 11 and a half years, and not one week has gone by where someone did not call me to borrow or withdraw from their life insurance policy. Disability income protecting while working, and then, of course, the cash value. We went through that. So age 20 to 40, there's a lot of members, some of my councils bring in young members in their late teens and their early 20s, and one of the first things I will show them is a small whole life policy for just getting them going, getting their feet wet, and just getting them in the door to start on that path to savings as well. We're going to move on here to age 40 to 60. I fall halfway through there. This is where I stop meeting with a lot of folks who convert term insurance, which is the temporary coverage. It's the rental insurance. Only 3% of term pays claims in the United States, remember that, to whole life insurance. Anybody that has a term insurance policy with the Knights of Columbus can convert that over with no health questions asked, which is really important, because I've run into folks who have their health has changed dramatically, but they've had term policies in place, and that's given them the guaranteed conversion rights, no health questions. So it's a big deal. Long-term care. Long-term care is also based on age and health. The earlier you look at long-term care, the better. Waiting on long-term care will have a staggering effect on the premium costs. So the reason I say that is, and there's going to be a slide in a couple of moments to display that, but waiting even a number, 2 or 3 years with long-term care can really jack up those premiums as opposed to looking into it when you're younger. And that's another thing. With any of these products I'm showing everybody here tonight, important thing is to just, if you're interested or if you're remotely interested, if you're on the fence, just check it out. Look into it. It might work for you. It might not, but it might. Okay, ages 60 to 80. I think we have a few guys here that might fall into that category, but I'm not sure. Of course, converting term insurance to whole life still. The Knights of Columbus offers term insurance up to age 80, which is new. Previously, all of our term products, which is temporary insurance, it ended at 70. So we've expanded that, and now we do have term insurance to age 80, which is phenomenal. The cutoff for applying for that coverage is 70 years old. Okay, qualified funds like IRAs, 401ks. One of our specialties with the Knights of Columbus is helping you with as many tax advantages as you can get. And a lot of that comes with retiring, and a lot of folks retire with 401ks, 403bs, smart plans, you name it. They're 100% taxable. Everybody knows that. If you don't want to touch those funds, you don't have to until you turn either 70 and a half or now it's 72. Once you reach 72 years old, you have to start drawing those funds whether you want to or not. And believe it or not, I have folks that have no issue withdrawing those RMDs and spending it and going on vacation. But I also have folks on the other end of the spectrum who don't need that money. They have IRAs and 401ks, and they're being forced to withdraw because the government wants their cut. So the Knights of Columbus has many, many concepts to take advantage of when it comes to maximizing the use of them RMDs through life insurance. It's a phenomenal tax loopholes with a lot of these concepts. Annuities, as we went over already, currently we are at 1.5% minimum interest rate. The worst news you can get is we're sorry you only made 1.5% last year. The good news is after a year on deposit, those are currently earning 1.9%. So in this market, that's difficult to beat. Passing wealth to children or grandchildren, a lot of my appointments now, especially with my retirees, they do have plans to pass to their children and to their grandchildren and to make a legacy. And one client I sat with last year, just by sitting with me for 20 minutes, they did have a certain amount aside for their 4 grandchildren, talking to me, and we set up a plan. And now, God forbid, death occurs. They're leaving 2.5 times what they would have been leaving before for their children and grandchildren, using the funds that they had earmarked for their grandchildren. So I think their grandchildren owe me a thank you card at some point. So let's go to the next slide, Ed. Is this my good side, by the way? KFC ranking. I think we might be upside down there. Bear with us, folks. Technical difficulties. This slide, if it's bear with us, folks. We'll be with you in a second. We could skip that one, Ed, if we need to. Can you scroll up on that one, Ed? To the top. Keep going. Bring it down some so I can see the companies listed. Perfect. That's good. All right, this is a report, folks, that that lists companies on their strength and their ability to perform in North America. So you're going to see a lot of companies you recognize up here: New York Life, Prudential, MetLife. I want you to see where the Knights of Columbus stands. So, AA plus, stable, very strong, excellent financial profile. Not bad for a little fraternal company that was started back in 1882 to help families and destitute. So thank you, Ed. I just wanted to point that out. Next slide. And next slide would be 30-year-old term. Now I'm going to just show you folks a few examples of cost and the types of policies that we offer. So page 2, Ed, there you go. I'm going to have you scroll down. This is an example of a 30-year-old for $500,000 of coverage. And I'm glad we have this up, because I've had a couple of members lately ask me about their children and their grandchildren. My child has a 2-year-old, or my child has a couple of kids now, and how much would insurance be for my children? So here's a general example of what you'd be looking at. Ed, could you scroll up just a hair more? So this is a term, that's good. Here's a term policy. As you can see, it's a $500,000 term insurance. It is rental insurance, so it's good for 20 years. And God forbid this person passes away in the next 20 years, the Knights is going to pay out $500,000 tax-free. And as you can see, the premium on that is very reasonable. It's $31 a month. Someone in their 20s, it's going to be even less, almost $20 a month. So let's go to the next one, Ed. All right, and here's the same person. It's Johnny Knight. I've named him. He's 30 years old. So there's the difference between a term policy and a whole life policy. You're going to see the cost is different. Everything is different about it, because one is temporary, one is permanent. Here's that same person. Here's a $100,000 example of a whole life policy. Whole life policies start at $15,000 and they can go up as high as you need. But the premium on this policy is going to be a lot different. Ed, could you scroll up a little bit more? Okay, so you see the difference. A term policy was around $31 a month, where this policy is $111 a month. However, I want to show you the difference in how these policies work. And I think, Ed, if you can scroll up to page 6, I believe it is, which is basically going to show you the figures. And a lot of you folks might have seen it. You might be familiar with all this information. One more page up, Ed. But I'm just going to review it with you just so you can see, because I hear it from a lot of folks. What's the difference between term and whole life? That's good, Ed. So here's the difference. So as you can see, this person, this 30-year-old, his premiums are a little bit higher. They're $1,290 a year. However, that rate is locked in because he locked it in at a 30-year-old, so it can never increase. The big difference here is, unlike term insurance, which has no cash value, it only pays off if you die, the whole life policy is going to start growing, and it's going to grow in cash value. So as this cash value is growing and dividends are earned, the death benefit is going to grow as well. So you see this 30-year-old, let's jump 20 years down the road, his death benefit's worth about $131, and his cash value is around $29,408 ballpark. And if we added the premiums times 20 years, I'd be willing to bet you every penny he's paid into the policy is in there in cash value. So it's a very difficult product to compete with. Ed, let's go to the next slide. So these are the main differences. Whole life, of course, is going to be permanent. And the next one is, okay, I'm jumping ahead to a 50-year-old. Something that's very unique about what the Knights of Columbus offers is that with our whole life, you can actually choose a whole life policy that you can pay into for as many years as you choose, and then the policy would be paid up for life. And we never had that option before. Everything was really detailed into either a life paid up at 100 or life paid up in 20 years, life paid up at 65. But now it's very unique because no matter the age you are when you start the policy, so this person's 50 years old, he could tell me, John, I want to pay premiums until I'm 65 years old. I'm getting ready to retire because I don't want any funds going out the door anymore. Now I want to be able to reap the benefits that I paid for the last 15 years. So as you can see, this is a 50-year-old, and it's a $100,000 policy, and this product was called, and this is life paid up till 100, so this person could actually pay these premiums until 100 or death. So let's jump into the next one, Ed. Okay, can we scroll down to the top? There we go. Up, down a little more. Perfect. So here's a 50-year-old, but as you can see, Ed, a little more. Or a little more. There we go. So see the top right-hand corner? This is only going to be paid for 15 years. So at the end of 15 years, he's paid his dues. His policy is done. The premiums stop. So let's scroll up to page 6, Ed. Keep going, Ed. Perfect. Perfect. Okay, so here's the difference in the policy I just showed you, because the other policy was a life paid up at 100. This policy is different. So as you can see, this 50-year-old, he's going to pay these premiums for 15 years, at which point the policy will be paid up for life. He can no longer pay premiums into the policy even if he wanted to. However, the way it works is, I'm going to jump over here again, cash value is going to grow into the policy. He's going to have a paid up cash value when the policy is paid up. However, even though he's no longer paying premiums into the policy, that cash value is going to continue to grow, as is the death benefit. You can borrow from this policy, which in the end would come off of the death benefit. God forbid death occurred. So there's a lot of intangibles. These are the Swiss Army knives of life insurance. There's so many benefits that whole life offers. So let me see. Ed, let's go to slide 9, which is single deposit whole life. All right, folks, this next type of whole life insurance that we offer is very unique. I've actually done a little bit of research, and I found one other company out there that offers this. And there's some great companies out there, USAA, Northwest Mutual, phenomenal companies, but they don't offer this. We offer what's called a single premium whole life insurance policy. And this comes into play when I sit with folks who are generally over 59, 59 and a half, and they're entering retirement, or they're entering a period where they want to start just watching their money grow safely, no stock market fluctuation. So this is a single deposit life insurance policy. So as you can see, this is a 65-year-old. So this is a 65-year-old. He just went into retirement. He has funds maybe sitting in the bank, sitting in a CD, earning less than 0.1%. And if the situation is right, I might suggest to him to, why don't you deposit 100,000 of those funds that are sitting in your bank account into a single premium life insurance policy. In this case, if this person was approved, he would deposit the $100,000 into the policy. In day one, this creates a $189,000 death benefit, meaning that if you let the Knights hold your funds for you and then a week later you passed away, the Knights is going to pay out $189,000 tax-free. Now, I'm going to scroll up so you folks can see the benefits of these. I think it's probably around page 6, Ed. This is why this is probably the most lucrative policy that the Knights of Columbus offers, and probably one of the most popular with our retirees. A little more. That's perfect, Ed. Thank you. So this is a 65-year-old, and he's going to deposit $100,000 of his money for the Knights of Columbus to hold. And you remember what I showed you about the death benefit almost being $190,000, $191,000. This column is really important, and this is why this concept is as popular as it is. Cash growth in the Knights of Columbus after year 2, currently, with the current dividend that we are earning. Keep in mind that no life insurance company guarantees dividends, and the Knights of Columbus does not either. However, we pay very high dividends, so this is a reflection of the dividend scale that we're paying right now, currently. So if you look at this cash value growth after year 2, it's currently hovering around 3.3 to 3.4%. And if I can go back to the savings account, what did I say that was, Ron? Less than 0.1%. And now we have a single premium product here that is, cash value is doing very, very well. Not only that, but this death benefit is going to continue to skyrocket. So just by letting the Knights of Columbus hold some of your funds for you, this 65-year-old, let's look at what he's got going on here. In 10 years, his cash value is going to be approximately $137,000 with a $210,000 death benefit, tax-free. Life insurance passes income tax-free. So very little folks know about this concept, but when I show them, it makes sense. Many times I'll go into homes, because most of our appointments are in the homes of members, and a lot of times I'll go in, and the folks will tell me very nicely that they're all set. They've had insurance. They're very happy with their insurance broker. And the one thing I ask is if I can just show them a concept or two. And after I show this concept, if it's in their wheelhouse, it's usually a done deal, because it's very, very difficult to compete with. It's a great night's sleep because your money is not tied up with market fluctuation, and it's working for you. So in my estimation, I would rather have $100,000 sitting with the Knights of Columbus, knowing that, God forbid, I pass away, I'm leaving double that income tax-free, as opposed to getting less than 0.1% sitting in a savings bank or a CD or something like that. So this is based on a 65-year-old. I'm going to go to the next slide, because I know there are 1 or 2 folks in their 70s in the Knights of Columbus here, and I'm just guessing on that. So Ed, let's go to the single deposit for a 75-year-old. Perfect. Actually bring that down again, Ed. So you're going to see the 75-year-old you can qualify for this all the way up to 80 years old. The numbers are going to look better, obviously, for the 65-year-old, but I want to take a look. $100,000 deposit for a 75-year-old, day one, if you're approved at healthy rates, creates almost $145,000 death benefit day one. Death occurs a week after handing the Knights of Columbus your funds to hold for you, and we're paying out $45,000 more, tax-free. So let's scroll up to Ed, I think to page 6. Perfect. So same thing. Like I said, with the younger person, their numbers are definitely going to look better, but these numbers still work. So this is a 75-year-old, and I want you to look at that tax-free death benefit growth. 10 years from now, at 85 years old, that $100,000 that we're holding for you is now $165,000 income tax-free upon death. And that number is just going to keep climbing. These cash value numbers based on our guaranteed cash value, which is this column, plus dividends, and these are based on the dividend scale that we are currently paying. The Knights does not show pie-in-the-sky figures or hopeful numbers. We show figures based on the dividend scale that we're currently paying, which keeps things very honest. So this is a single premium life insurance policy based on a 75-year-old. So like I said, so many times I've gone into homes and prepping for appointments, and the first thing I'll hear out of their mouth is, we're all set. I'm 75, I'm 78 years old. There's really nothing you can do for me. Well, that could be true, but it may not necessarily be true. Okay. Ed, let's go to 100K at 1%. It's a different slide, Ed. Bear with us here, folks. Two over, Ed. Next one. Boom. Perfect. Okay, this is an idea of what we just went through the single premium, and I just want you folks to to get an idea of what your cash value would look like leaving it in the bank. This is $100,000 at 1%, which is 5 times more than what your bank is paying you right now. So I won't bother going back to the single premium slide, but you can get an idea of, you all know you have money in the bank right now, so you have a pretty good idea of how your money's growing in the bank. Okay. So Ed, let's move on to long-term care examples. Okay, perfect. Long-term care, folks. This is a touchy subject for some folks. One of the main things I hear from a lot of folks is that I can't afford long-term care. I've heard just from so many folks that it's just, out of my reach. I won't be able to afford it. It'll kill us financially. So maybe so, but you have to look at your age. You have to look at your health. And you have to make sure that it makes sense for you. Long-term care does not make sense for everyone. I've had to tell plenty of clients over the years that, it just doesn't make sense for them financially. And I think it would do more harm than good by sinking premiums into a long-term care. But if you do have assets to protect and you're worried about getting the proper care that you want in your hands, then long-term care can be very important. Long-term care, the basics of long-term care. When long-term care is sold, it's sold as a daily benefit, meaning that you're going to pay premiums for X amount of years until you need that care. When you need the care, your premiums stop and the benefits start paying out. So I just want to show folks here how this looks, and I think this is, Ed, could you scroll up a little? I think this is for a 65-year-old. Down a little bit, I'm sorry. Other way, Ed. Oh, this is for a 75-year-old. Okay, perfect. You can go back up. Okay, so I'm going to show you the difference between someone applying for long-term care as a 75-year-old or doing it as a 65-year-old. This is a 75-year-old, so this is a couple of examples. This is a $100 a day benefit, and the column on the right is a $200 a day benefit. So this is going to give you an idea on what you'd be looking at. Knights of Columbus is sold as a daily benefit, meaning that if you bought this policy and then you applied for a claim, the Knights would start paying out $100 a day or $3,000 a month. This plan is for 10 years. So over the course of 10 years, we'll end up paying $365,000 for your care, as opposed to you paying out of pocket, as opposed to you having to liquidate your assets. I've heard some horror stories over the years of families having to basically liquidate, sell homes, and these are assets that would normally have been passed to children and grandchildren. It can be very heartbreaking. So long-term care can preserve your assets and everything you've worked so hard for. So there's a lot of intangibles with long-term care. There's a lot more that we can cover on a quick benefits night here tonight. But if you're even remotely interested in learning about long-term care and the costs and how it would affect you, and even if you're in the position to qualify for long-term care, definitely please reach out to us at any time. I'm happy to go over any of that. Ed, let's jump out of this one, because actually let's hold here. So I want you folks to see the $100 a day policy. By waiting till you're 75 years old, that's about $4,193 a year. Actually, and the Knights does, if you and your spouse, this is unique. This is a Mr. and Mrs. Knight, and this is them applying for coverage at the same time. The Knights of Columbus offers a benefit. If the husband and wife apply for long-term care and they are both approved at the same time, we offer a 30% discount on premiums if husband and wife are approved at the same time. If one of you is declined, then we still offer a discount, but it's dropped to 15%. So as you can see, for both of these couples, you're looking at about $77,000 a year, but that's 2 long-term care policies. That's going to cover them for $6,000 combined a month when they do need the care. And keep in mind, that care can be in their home, in an assisted living, in a nursing home. And I've had clients that have gone from one to the next, all under their long-term care contract with the Knights of Columbus. So Ed, let's jump out of this one and go to I think that's the last long-term care slide. I think that's it, yeah. And scroll down just a little, Ed. No, other way. Just the same one? No, this was a 75-year-old as well. The same one? Okay, we'll go to the next. No, well, either way, we can actually wrap it up there. So Ed, can we go back to the slide? It was the second slide, because I just want to recap for everyone. Nope, it would be benefit type point, Ed. There it is, perfect. So I'm just going to recap on the things that we went over here tonight. Ages 0 to 20, really important. Locking the kids in at lower rates. Savings policies for children, they're phenomenal. Ages 20 to 40, it's really, really important to start looking at, some types of temporary insurance, be term. There's so many kids graduating with hundreds and hundreds of $1,000s worth of student debt. That student debt should be covered with a term policy, and it would probably cost around $12, $13, $14 a month, something like that at their ages. As you get a little bit older, of course, we're looking at retirement, or at least eyeballing retirement, talking about qualified funds like IRAs, 401ks, and the benefits you're going to have in them down the road, and the pitfalls that you can stay away from, a lot of the tax pitfalls of those accounts. There's a lot of ways through life insurance that you can give yourself much needed leverage against that taxation. So there's a lot of tricks to the trade. And then Ed would go down a little, scroll up a little bit. And then, of course, 60 to 80, guys, really important. Term insurance. If you have term insurance left at that point, you're going to want to make sure you try to convert that over into something permanent that's not going to go away on you. Qualified funds, retirement, IRAs, 401ks. There's a lot of benefits. There's a lot of ways to make your interest only or your RMDs work so much harder for you than to just take it out, throw it in the savings, keeping it in, letting it grow. Watching it risk, maybe watching it go up, watching it go down. Of course, long-term care, passing well to children and grandchildren. I go into a lot of homes of a lot of retirees, and more often than not, there's folks looking to pass funds to their children and looking to pass funds to their grandchildren. Sometimes it's inadvertently, but they definitely are interested in that. So if you're looking to do that, the Knights can certainly, we can take what you want to leave to your children and maybe double it or triple it on a tax-free basis. And then over 80 years old, of course, we have our annuities. You can open up an annuity with the Knights of Columbus. I believe it's up to 85 years old right now. And those annuities can be opened with as little as $300, or you can roll existing funds in. You can transfer funds from other IRAs, Roths, non-qualified accounts, maybe with other insurance companies. The Knights of Columbus takes care of that paperwork for you. So that's it, folks. I do want to thank everybody. I'm going to hop down here. I do want to thank everybody for attending, folks that might have logged in tonight. Really appreciate your time. I hope this generated some interest, not just in the benefits in the insurance program, but more importantly in the Rainham Knights of Columbus 10289. These guys are great guys. And you know what? We need help. We need help in this council, and we need members, and we need people to maybe show up every once in a while. The thing with the Knights of Columbus, there's no pressure with our membership. If you join the Knights of Columbus, nobody's going to put a gun to your head and make you show up every month. If there's months that you can't come out, then you don't, but you show up when you can. Some of my councils, we have members that come out once a year to give out Tootsie Rolls during our annual Tootsie Roll drive. And you know what? We greatly appreciate them coming out for that. So with the Knights of Columbus, it's really about, getting involved, making new friends, and being part of something that is very, very charitable. So thank you very much, everybody, and I hope you have a wonderful evening, and God bless.
John, I don't, whether there's any question and answer.
And Eddie, how many we have? Did we double to 2? My wife log on after all? Yeah, that's right. I forgot about the Q&A. I usually charge extra for that. Say that again? The next question. I need a wheelchair ramp.
John, would there be any benefit to letting the public, the parishioners know, those that are interested, how do they get a hold of you?
Absolutely, yeah. What I can do, Ron, is I can definitely leave you some of my cards, but if anybody reaches out to you, you can give them my card. I only use one.
You don't mind?
No.
Thank you.
Tell them I'm no hands. No matter what John's book says. I used that term the other day. Somebody said, what the hell are you talking about? What hands to? I'll leave those with you, buddy.
Insurance agents are hard to find, as hard as finding hints to.
Ed? Were there any questions that need answering? Or?
Mm-hmm. Mm-hmm.
Camera looks like it has 50 pounds.
That's why he wanted a wide angle one.